I'm Edwin Warfield, the publisher of Citybiz, and I'm honored today to interview Todd Wickwire, the CEO of WMS Partners. Welcome, Todd.
Edwin, great to see you. Thank you for having me. I appreciate it.
Your career included stints at Wells Fargo, Alex. Brown and Sons, and J.P. Morgan Securities. Provide some highlights from your career and the decision to join WMS Partners.
Sure. So I began my career at Alex. Brown back in the late 80s, and that was very much a sink or swim environment. And the more experience you got and the more capable you were, they give you even more. And it was a pretty heady experience to be, late 20s, early 30s, to be running multi-million-dollar deals and working with some of the most amazing entrepreneurs in technology, life sciences, and other areas of the economy. And in working with these individuals, they had spent their entire lives building these companies, and going public or selling to a strategic buyer or even to a private equity buyer was a huge milestone. And it was their life's work. So I felt a deep sense of responsibility to really execute on those transactions, to reward them for all their hard work. And I've kind of taken that approach to being totally invested in your customer relationship to make sure that you achieve their objectives. So it was really good training. Alex. Brown eventually, through a series of mergers, ended up being part of Deutsche Bank, which was a global investment bank with a different mandate than Alex. Brown had. And I really missed that. My colleagues and we really missed that sense of partnership. So we started to have some conversations with other regional banks who were looking to break into investment banking and capital markets. And we were recruited over to Wachovia, which is now Wells Fargo, to jumpstart their equity capital markets business. So a number of us left Deutsche Bank and went over to Wachovia to do that. And after a lot of recruiting and building, we all looked up and said, well, there's no one to run the research department. Every major department had been staffed with a leader, and research was the only thing available. And they all looked at me and said, hey, Wickwire, why don't you give it a go? So at 34 years old, I found myself running a department of well in excess of 100 people with a mandate to grow a top 10 franchise on Wall Street. And I thought, how's a 34-year-old kid going to manage, lead, direct individuals who had been in the business much far longer than I had? And I had studied this concept of servant leadership. And I turned it on its head and said, you know what? I actually work for you. You don't work for me. Maybe 2 times a year when I give you a promotion and pay, but the other 363 days, I work for you. I'm going to remove barriers, give you opportunity, and recognize your contributions. And that really worked. And I've adopted that sort of management slash leadership style in my current role and every role I had after that. I think it's the only thing that really works. And just like with Deutsche Bank, Wells Fargo became a very decentralized or centralized command and control type of firm. And I got that sort of partnership itch again, and was able to, by a lot of luck, come across Tim Chase, Martin Eby, and Dave Citron, the founders of WMS, who recruited me and just to come in and manage the firm. They had been wearing multiple hats, growing the business as any entrepreneurial company does. So I was brought in as dedicated management and with the mandate to build out a broader management team, which I've done. So it was really getting back to that partnership mentality where people are rowing in the same direction. There aren't conflicting internal agendas. And it's been everything I hoped it would have been and more. I just finished my 4th anniversary here.
So provide an introduction to where WMS Partners is today, assets under management, locations, key employees.
Sure. So we are just shy of $6 billion in assets under management, and about 40% of those are in private investments. And we can talk about that later if you'd like. We have 86 employees. We are have offices in Towson and Columbia. And, we're looking to expand and grow, but the firm is an RIA, but with a specialty focused on ultra high net worth families and high net worth families. Although we're starting to focus down into a segment below ultra high net worth, where we think there's an opportunity to bring a lot of the capabilities we have to those families. So, and the firm is just celebrated its 30th anniversary, so we're excited about that, and feel like we've got a lot of momentum and the right culture to continue to grow. So, the future, I think, is bright for us.
WMS Partners is described as an open family office. Can you explain what that is? What do you mean by that?
Sure. So, as opposed to a single family office with one family where investments are managed and all of the work is done for that single family's benefit, we work with multiple ultra high net worth families. And what we mean by open is we want to bring that specialization, the sophisticated investing and planning to a broader circle of families. That's kind of our tagline. So what that means is we want to bring that sophistication to families who maybe aren't ultra high net worth yet, but they're on their way. And so for us to get in early and help them plan and invest such that when they do accumulate significant assets and are high net worth and then ultra high net worth through generations, that they already have a plan in place, a foundation. So we're really pushing that sophisticated planning down to a client who might not have the asset level yet. And we've figured out ways, processes where we can do that. And we have a desire to do that. We really do.
Can you tell us about some of the new shareholders that WMS Partners just brought on?
So we have a total of 18 shareholders currently, 4 of which are female, who are in very senior and impactful positions within the firm. And we're excited about it. We think a broad, deep, and diverse shareholder base is really critical for the future of the organization. So, in 2.5, 3 years from 8 to 12 to 18, and the goal is to get that into the 20s and beyond.
So WMS Partners recently promoted Josh Rowe to co-chief investment officer. Tell us about his background and his investment strategy.
Sure, absolutely. So Josh joined us in August of 2019 and was really one of my and Tim Chase's first big hires that we made together. Josh was brought in as director of research, and his impact across both public and private investing really spoke to us and said, this individual can do a lot more, and we want him to impact more of the organization. So our current CIO, Paul Spiergus, he and I spoke, and Paul thought it was time to elevate Josh to his co-CIO because they work incredibly well together, very similar investment styles. And Josh, before this, worked for an alternative asset manager where he was investing in both credit and equity. And that's a unique skill set, someone who can look at both credit and equity, because the securities inform each other in terms of where you are with interest rates in the market. If you can look at both of those instruments and understand their direction, you can become a pretty successful investor. So he did that. And in addition, he is a financial services investor by background. And if you know anything about financial services investors, they have to know not only the company, how it works in the industry, how the companies compete, but they also have to have a view on the macroeconomic environment. And they also have to understand complex financial instruments, derivatives, CDS, et cetera. So those investors, from my 20 years on Wall Street working with those types of individuals, they really have an expansive view of the market and investments. And Josh has really brought that to WMS. He's a PhD from Princeton. He can get as academic as you need him to be, but he can also be very common sense and focus on the reality and not buy the hype of certain investments. We have a lot of investors here it's very difficult to convince them the investment that's being shown to them is worthwhile. So Josh is one of those. You've got to convince him before he's even going to start to consider the investment. So he's been a home run for the firm and a great partner. We all love working with him, and we're very happy that he decided to join WMS.
So what role does private equity play in your clients' portfolios, and how are you sourcing those types of deals?
Love to talk about this, Edwin. The firm really was founded and formed around this type of investing, private investing. The early founders believed that complementing the public market portfolio was critical. And the reason that is it provides diversification. It provides less volatility. So your risk-adjusted returns tend to be better. So we've expanded dramatically from some very esoteric fixed income investments back in the 2010 timeframe to extending into private real estate, private credit, and then private equity is where we're really spending a lot of time now growing that platform. And the reason we like those segments, and we really focus on what we call the middle market and lower middle market. These are private equity managers, private real estate managers, private credit managers that operate in that middle market. So think about fund sizes below $1 billion, most in the 5 to 600 million level, where they come in and provide a lot of operational value add to the assets they're buying, be it an apartment building, an operating company, a service business, where they come in and really try and improve the business, grow it, expand through acquisition. And we really like that approach. You're benefiting from the sweat equity of these managers, which is very different from how the large managers work. The $5-10 billion funds by the brand name private equity firms, they're putting a lot of leverage, debt on the balance sheet to create return. They're taking a lot of costs out and then trying to sell it for some sort of return. We like our approach. There are a lot more opportunities. The number of private companies it dwarfs the number of public companies. We know the number of public companies are shrinking. So we like that approach. And our managers, the managers we source for our clients to invest in, they're builders, they're growers. And we really like that. And then the last point I would make on that is private companies are staying private longer. And therefore, a lot of the value creation is happening while the companies are private. The private investors, venture capital, private equity, growth equity, they're capturing that growth in value and then taking it public or selling it to a strategic or financial buyer. So we want to get our clients involved in that segment of the company's life cycle, because that's where the real returns are. You're buying companies at 5 and 6 times EBITDA. You're bringing in a lot of operational value, expertise, sweat equity of the manager, and then you're selling them in the public market for a premium that's sometimes double 12, 15 EBITDA. That's a recipe we really like.
So WMS has 5 in-house trusted estate attorneys. What is their role in client relationships, and how does that help WMS differentiate yourself in the marketplace?
So I refer to our private investment team and I might get in trouble with this, but for this, I refer to our private investment team and our planning team as kind of our secret sauce. It's things that we do, people that we have that others don't. So this 5-person team, they all have extensive experience in designing pretty complex trust and estate plans for families. So we provide that service to a family. A family comes in and says, we want you to invest our money. We want you to do our tax and estate planning. We provide that high level of expertise with this team for their estate, trust, and tax planning. But there's no additional cost. There's no hourly charge for these attorneys' time. It's all part of their base fee that they pay for all the services. So it's very cost effective, very efficient for them. And essentially what we do is we design the estate plan and spend a lot of time reviewing it. We review it on an annual basis. But when we first put it together, once it's complete, we then take it to an attorney, an outside attorney, and have them actually draft the documents. And we work with some of the best trust and estates attorneys in the Baltimore, Maryland area, but also around the country, New York, North Carolina, Texas. But we really feel that is a not only a cost savings for them, but for a real intelligent, effective way to go through their planning. Because you can make the best investments, but if you give it all away in taxes, right, after tax returns, after tax, after fee returns, that's what people need to understand. So we're always focused on low fees and low taxes. And we call that asset location. So when you make the investment, hopefully it's a great investment, but where you put it, what location it's in a trust, in an IRA, based on the type of investment, that can really reduce the taxes you pay once you realize that investment and create a much better after-tax return. So asset location and the work that our planning team does on that is imperative.
And so what are the growth plans for WMS Partners?
Ambitious, but achievable. No, I'm obviously kidding. We love growing. We continue to grow. When I joined the firm, I think we were roughly a little over $4 billion in AUM. We're now approaching 6. I think we actually touched 6 at the end of 2021, but with the market downdraft, that brought us back down to the mid to high 5s. So we want to grow both organically and inorganically. And organic growth is just client referrals, making sure you do a great job for your family, so they're wanting to refer you to their friends and their family because they value the work that you do. And growth is important. And I know you know this, Edwin, but growth brings more profits, which brings more resources, which brings higher pay for your people. The organization is better for all those reasons. And then guess what? You make the client happier. You do a better job. And then they refer people. And it's a virtuous circle that just keeps, completing itself. So growth is very important. Top talent in our industry or any industry, they want to join a growing firm. So we're very interested in growing. And what we look for in potential merger partners is, number one, can they bring us into a new set of capabilities or introduce us to a new investment approach? We're always looking for a new investment opportunity, something that we think we could add to our public or private portfolio. So do they bring investment capability, other talents like trust services? That's something else we're looking for. So it's enhanced capabilities, additional capabilities, new geographic regions. We'd love to get into some of the more growthy markets in the Southeast and Florida, so we can build relationships with RIAs and families there to continue to grow. That's a really big piece. And the last piece really is client segmentation. We're really starting to look at our client segmentation from our multifamily office clients to our ultra high net worth, to our high net worth, and then down to what we call wealth advisory and investment advisory. And we really want to expand that wealth and investment advisory segment. We think we can provide a lot of sophistication in both planning and investing to that client level that's below high net worth. So if we can find a partner in the market that can help us grow that and maybe even lead that business for us, we would be very interested in that type of merger partner. So, two questions that we ask ourselves around a merger opportunity: do they have the same cultural values? Both the humanistic, morals. That's number one. And if we answer yes to that question, we then ask ourselves, do they enhance our platform to benefit our clients? And if we can answer those two, that would be a merger partner we'd be very interested in. So we're looking forward to it. We've grown dramatically headcount wise from 60 to 86 people in anticipation of this growth, which I think we'll be able to support. So exciting times at WMS. And I'm so glad to be here and working with my colleagues. Got a great group.
Well, Todd, I want to thank you for sharing the story. I've been following WMS Partners over the years. It's an exciting team, exciting growth. And when you reach 10 billion, call me. Let's do another interview.
We'll do it. Absolutely. Maybe over dinner.
Okay.
Thanks, Evan. Great to see you.
Great to see you.
Take care. Bye-bye.